Right, let's get the recording. Right, good afternoon and welcome to the next exciting part of our ETF challenge. I can't believe we're moving into week 5 already of the competition. And today I wanted to focus a little bit about what is happening locally and globally with regards to a market analysis. Some students do follow a general consensus of what's happening in the news with regards to the volatility, with regards to local share markets. Some students have got some investments that pretty much enables them to receive material with regards to market analysis. But I just want to start off by saying that market analysis and understanding what is happening in the local, and of course, if you are going to be investing offshore in the offshore market, is critically important for a number of reasons. Your investment choices are going to primarily be based on the research that you are going to be doing into the various ETF options that you have in relation to the risk profiles that you have identified. But you need to first have an understanding of how those particular exchange traded funds are structured. Are they local or are they basically global in orientation? All right. So one thing that is very, very important to understand is that when you do start making a couple of comparisons, it is very, very important to understand what type of exchange traded funds locally within your risk profile are going to be a good decision based on what is the market volatility with regards to that type of exchange traded fund, and especially if it's globally in orientation, just to understand what are the main aspects that you need to take into consideration. And unfortunately, every week it seems to change. So on my first slide, I put together a couple of pointers or important aspects with regards to our local South African market. And the economic review or overview that I put together is primarily based on what particular aspects have had a negative impact on the performance of the market in South Africa. Now, unfortunately, you would see the word negatively impact. We are not in a trading cycle that has got a massive amount of positivity with regards to local and offshore markets. And therefore, one needs to be even more diligent and a little bit more focused on the type of research that you need to compile. Otherwise, your choices are going to be very much a eeny, meeny, miny, mo situation. So in South Africa, the inflation, and remember that a lot of economists will refer to inflation as the cancer of wealth. So remember that inflation for an investor, 1 rand that is invested today will automatically devalue with the inflation percentage currently around about 5.5 to 6% on investments. So in other words, if you invest 1 rand today, it's only going to be worth around about 94 or 95 cents this time next year. So one needs to take into account that inflation automatically is going to devalue the monetary value of your investment, even before you look at making a return on that particular investment. So inflation year on year has declined slightly from 7.8% in July to 7.6% in August. Now, the decline, however positive it might seem, it's the actual percentage amount of 7.8 or 7.6% that is of massive concern in our local economy. So much so that you might have also heard of the recent interest rate cycle that is in the upward curve at the moment. We've had a number of interest rate hikes that are hurting consumers with regards to debt. But on the flip side of that coin, a lot of investors are looking at various investment opportunities, such as the money market, and looking at investing their money and getting a greater return than what they would have a couple of months ago. The South African rand, unfortunately, has been one of the world's weakest currencies, and it has depreciated by 9.7% to the US dollar. One must put that into context, though, is that the US dollar is on at an all-time high, even against the British pound, which arguably has always been one of the strongest currencies on the planet. But when we look at the South African rand and the value of the South African rand, that also has a big impact on the performance of our cash and bond markets as well. Then having a quick look at what's happening in the global markets, offshore, in other words, and a quick look at global bonds, which is primarily made up of the FTSE and the UDS index, which is a very much UK and North America based, is now in its first bear market in 76 years, having dropped more than 21% year to date. So just a couple of aspects that I'd like to focus on here. When we look at the FTSE, that is exactly the same as our Johannesburg Stock Exchange. It is a stock exchange that tracks all of the big index private companies in the world. And the bear market means that you get two different markets. You get a bull market, which effectively means that there are great returns to be had if invested in the correct portfolios. But a bear market means the complete opposite, that we are in a very negative cycle. And so much so that bonds, remember there are 4 different asset classes that we spoke about. You have property, equity, bonds, and cash. Bonds are the second less risky asset class. Even bonds, who have got quite a low base of risk, is in a bear market for the first time in 76 years. Gold has declined by 7.5% during the third quarter. Remember, the third quarter is effectively from July to September. And that also does not bode well for our South African stocks that have got a commodity base as an underlying value return. And this is the worst quarter since March 2021 with regards to gold. And that is also of significant concern for a lot of commodity traders in South Africa. Income assets are now dominated by preference shares. If you have obviously attended some of your and been affiliated with your accounting terminology, preference shares have got always a dominance over ordinary shares, and it basically means that all of the preference shareholders within various companies who have got first bite at the cherry with regards to dividends, a lot of those preference shares will not become available for payout, and that is because a lot of the income assets that are built in globally are at an all-time low. Cash is the second following bonds and property. In other words, what this means is that following bonds and property, cash, which is your lowly liquid investment, is basically the best place to put your cash, especially from a short-term point of view. So when one looks at the local and global markets, it is always important, and I would encourage all students, and especially in the future when you do start working and you are looking to invest some money, especially in the share market, but ETFs, remember, is a consortium of various shares and a basket of shares that are compiled within a risk category. It is important to understand what is happening in the local and economic overview. Okay, all right. So Dominic, thank you. You literally took that question out of my mouth. Are there any questions at this stage with regards to what's happening in the local or global markets? What type of impact you should be looking for that might impact your decisions? Or has anybody read something that they'd like to add that might be of some significance. All right. Good. All right. If there are any questions, please remember it's always beneficial to just mention, put it into your chat box, and then I will definitely attend to it as quickly as I can. Right, so some factors that I put together to consider when choosing an ETF. There have been a number of students that have been maybe a little bit skeptical with regards to which one of the myriad of choices do they choose. Remember, guys, that ETFs will simplify the selection process because all of the funds that you have got to choose from simply track an index. Okay, so an index is a whole list or consortium of companies that are basically grouped or categorized within a certain sector of the market. So ETFs will therefore give you a very diversified exposure to the market without you having to worry about the performance and the costs of those particular options. And always remember that as time goes on, the power of compound interest significantly affects the long-term performance of each ETF that you will choose. So a lot of my financial management students in their second year, first semester, will learn about the power of compound interest. In other words, the longer you keep an investment in place, and a lot of the interest is calculated effectively over an annual percentage, the more interest on interest you will receive on your capital every single year. So the longer you receive, the longer you invest your ETF for, even though there is volatility, you should receive compound interest impact over the long term. Mohammed, in regards to the market, what should we look at for to be a sort of indicator to help us when investing? So what I would definitely state is have a read and with regards to the 4 asset classes, locally and globally, have a look at what the 4 asset classes, in other words, what your property, equity, bonds, and cash are doing locally and offshore, globally. And you will see that when you do your research on your ETFs, you will see what type of percentage composition each of those ETFs has in the consortium of companies that has been invested in, and you would be able to get a very good understanding of what type of risk and return grading you're looking at for that ETF. In fact, what I think I will do for next week is next week I'll speak a little bit more about more of a more deeper look into 1 or 2 ETFs that I'm going to mention and talk about today. Maybe look at what are the more integral parts of those that aren't necessarily given on the Easy Equities platform, but when you do research them, you'll be able to get a clearer indication of exactly what type of impact the local and global markets have got in relation to the asset classes. Okay, so I think at this stage of the competition, that is really all that you should be looking at in order to invest. There's no blueprint for anybody just to download or to read through that is going to give them maximum exposure, and that's because of the volatility as mentioned in the previous 2 slides. Okay, all right, does that help you, Mohammed? Okay, all right, there are a myriad. If you wanted to know where you could start, Allan Gray, Coronation, Investec, all of your asset management companies have got very frequent market indicator reports. And if you go online and even Google them, you'd be able to catch a lot of that information on those reports. Okay, all right, then returns with regards to ETFs are easy to see in hindsight, but impossible to predict. If we all had a crystal ball to see how our investments were going to do in the future, I guess we'd all be a lot more well off than not. But remember, don't be too hard on yourself. If you choose an ETF and there has been a negative return over the last couple of weeks. Please don't go and lose heart or confidence, but use it as a learning curve to maybe diversify out from that particular ETF into more maybe even local or global operations. All right. Okay, a couple of the impacts of costings. Remember that when you do start understanding the impact of shares, remember that costs are a big part of your investment decision. Have a look when you do your research as well. Have a look at how much the costings are with regards to how much percent are the fund managers going to take off from your returns. It's also known as TIC, total investment charges. So if you do research any of the ETF fund fact sheets, you will see that there is a total investment cost, a TIC, and that percentage is effectively deducted from the return on that investment before you get allocated any percentage return in the form of profit. So therefore, you need to look for ETFs which will provide you a cost-effective investment solution. In other words, look for particular funds that have got the lowest charges. And Easy Equities and the Easy Equities platform, remember that this particular competition, guys, please remember that the Varsity College competition that we are running, we do not have any direct affiliation with Easy Equities. All right, so there's no link on any of the material that we would share with you that you can just connect directly to Easy Equities. Easy Equities is a completely separate investment platform as per the first couple of sessions that we have held. But Easy Equities, their basic trading platform offers a very cost-effective percentage cost and allows you to purchase a whole range of different ETFs. So a quick tip that I put together for everybody, if you're not sure where to begin, rather stick to between 2 and 4 ETFs that have an exposure to South African equities as well as to offshore equities with some property and some bonds that have been included in that as well. So try and mix and match a couple of your ETFs. Some of them will be local, some of them will be offshore, but also make sure that you don't put all your eggs in one basket with regards to going for very high equity performances, because those are very volatile at this point in time. So you want to have a mixture of equities, property, cash, and bonds as well. All right. And then what I wanted to just give you an idea of a couple of trading pointers. All right. So the amount that you would invest. Remember, guys, that you've got 100,000 Rand money or demo account. So you are able to really diversify your trading monetary values, if I can put it that way, into a consortium of different ETFs. But what I've done here is just give you an example of a balanced fund with therefore a 25% holding. And I must apologize, for some other reason my slides seem to have cut off right at the bottom, but I will complete the bottom section for you by typing it out into the chat box for you when we do get to the bottom of that slide. Let's just check over here. Sorry, just a quick check-in. The bottom of the slide over here, am I correct in saying that it cuts off the bottom sentence says core shares preference share ETF? Is that correct? Okay. All right. So apologies for that. I'll make sure that I make my writing on my future presentations a little bit smaller so that I can make sure that we can fit everything in, but you're only missing the very, very bottom line, which, as I say, I will fill in a second. But if you look at the Satrix 40 ETF, which is under the aggressive risk portfolio, all right, that, remember, aggressive local means that depending on your risk profile, just one thing I wanted to mention, a number of students on the Cape Town campus have come and chatted to me remember that if you have basically disclosed that you are a moderate investor, then it doesn't mean that you can diversify your investment portfolio into also conservative or aggressive or moderately aggressive. You don't have to pick your ETF choices only from the risk profile that you feel that you will fit into, or that suit your profile the best. Diversification means you need to look across all of the risk profiles and basically choose a consortium of ETFs that are different in risk profile and also might be local or offshore. Okay, all right. So look at all of those basic determinants. That's what makes this competition so exciting. There's no restrictions on the type of risk profile ETFs that are available on the Easy Equities platform, and there's no percentage limitation or rand value limitation of where you can put your money into. Okay, so what I've put together for here is, please note, this is just an illustration. This by no means tells you what you have to go and invest in, but looking at the markets over the last couple of weeks, a balanced fund means that your diversification with regards to all of the risk profiles, this is basically my pick for the week, if I can put it that way, if I was a horse racing man. The Satrix 40 ETF, if you look at the aggressive, it's under the aggressive risk profile. It is a local portfolio, all right? So when you do, if you want to research that, have a look at what local aspects, okay, what local aspects that we've touched on today would impact your decision to invest in that portfolio. Then the core shares S&P Global Dividend Aristocrats, a beautiful name for an exchange traded fund, is under the moderate risk profile, all right, and moderate to aggressive profile, and that is a global portfolio that very much has a diversification across all of your 4 asset classes globally. Then your One Invest Global, so obviously when you see the word global, you would come to understand that this is a offshore portfolio, but the global government bond index feeder. And as the word bond index suggests, the bond index is your second less risky risk asset class. All right, that is from your moderate risk profile options that you have to choose from, and obviously that's global. And then the core shares preference share ETFs, that is a conservative local, okay, a conservative local fund. And that really is, when we talk about conservative portfolios, remember that at the end of the day, you need a stabilizer. When everything is crashing, and I use the word crashing, but when everything is very volatile in the markets, we call that a pretty much a market crash at that point in time. You need a stabilizer. So when you're looking at your conservative risk portfolios, you will need a certain percentage of your money invested in those portfolios just as a safety net when your more aggressive risk portfolios are not performing as well as what they should. Okay, remember guys, diversification means every week there could be a change in the returns, negatively or positively. You need to even those out, and that is basically spread over the entire term of the competition. Okay, right. So questions. Does anybody online or connected currently have any questions with regards to maybe a couple of funds that they've looked at, that they're not sure about, whether they should go cross-border with regards to risk profiles, etc.? Okay, guys, remember my email. I am available on email if you are looking and you are researching, you're not sure maybe of a couple of the elements or a little bit of the material that is being provided by the asset management companies while you're researching, please feel free to email me. A number of students are emailing me on a regular basis, which is great to see. Right, would you recommend daily trading? No, especially not with ETFs, and the reason for that is that the last thing you want to be doing is selling and buying on the ETF platform on a regular basis. And the reason for that obviously is because, remember, compound interest. The longer you leave your trade in a particular sequence and a time horizon, the more volatility that it will absorb at any particular time and produce a profit at the end of that term. However, it doesn't mean that you have to only pick, let's say, 4 ETFs and stick with them until the end of the competition. But I would certainly not change my trades within a time period of around about 3 weeks, 3 to 4 weeks. Okay. My analysis would be weekly though. Okay, my analysis would be weekly. So I would maybe set, what I normally do is every Monday morning, I have a look at the previous week's local and offshore market indicators. And that will give me a very good idea of what I'm likely to choose for the week, or likely to disinvest or invest or diversify for the week that's coming. So remember, the week before gives you a very good indication of how markets have performed and give you a starting point for the week going forward. Okay. All right, but certainly daily trading. If this was a share platform, absolutely, you could buy and sell shares on a daily basis. But for exchange traded funds for this competition, I would not change, disinvest and invest more than on a 3 to 4 week timeline. Okay. Right. Any other comments? Also, comments are welcome as well. Okay, all right. But to everybody that has joined, thank you so much. I hope that this presentation has made your structuring of investing a little bit more straightforward. And yeah, it's just a quick check-in. How many trades have you traded? Have you placed at this stage? Has anybody managed to? Oh, wonderful. Well done, Mohammed. After this particular session, it'll give you some good ammunition to go and do some research and place some good trades. So well done on that. And Ole placed at least 10 and a 50 grand. Okay, so you